And for more on this, we are now being joined by Mr. Ajay Bagga, he's a market expert, joining me live from Mumbai. Mr. Bagga, always a pleasure having you on World Business Watch. So, we've tried to, encapsulate all the factors which are affecting this rally, this surge in gold. As per you, what are the factors affecting this surge? If you could give us a holistic understanding.
Yeah, over the last 4 years, as money moved out of the Chinese property sector, a lot of the Chinese consumers moved to gold. Second has been over the last 4 years, again, central banks, which used to buy about 300 tons of gold every year for their FX reserves, they started buying 1,000 tons a year, especially after Ukraine and after the seizing of the Russian FX reserves. So this de-dollarization is the second thing. Third, whenever interest rates come down, non-yielding assets like gold become attractive. So with the Fed rate cut cycle starting in September of last year, and then other banks also cutting, we saw gold being bid up. And the fourth has been the uncertainty that President Trump's second term has unleashed in the global markets. What I have heard from bullion dealers over the last week has been after the threat to Iran and the moving of the B-52 bombers and one more aircraft carrier by the US to the Middle East, with the higher geopolitical risk of a Middle East flare-up, Saudis and Qatari government have been buyers of gold. So the incremental demand over the last week has also been geostrategic in nature. So central bank buying, consumers continuing to buy, and now geopolitical risk also contributing to this, apart from outlook of rate cuts.
Mr. Bagga, as far as the surge is concerned, we've only been seeing those rates going higher and higher. Do you see this trend continuing for the rest of this year? Do you see gold rising further?
Well, from my experience, it should take a pause. But what happens when there is so much momentum and all foreign brokerages are coming out with 3,500 kind of objectives? We are seeing flows into gold ETFs, that is helping it. But what we have to keep in mind, Indian consumer has started selling. If you anecdotally speak to the big jewelers, they are saying people are bringing in their gold holdings and encashing it right now, waiting for it to come down. So ideally, as some kind of certainty sets in on the Trump policies, there should be a move again out of safe havens into emerging market equities, emerging market bonds. And there's some money on an institutional basis could come out of gold. The Trump administration again wants to bring in digital currencies as a measure of reserve. So those kind of moves could hurt gold. Indian consumer on the margin has started more of selling of gold than buying of gold, but this is more anecdotal evidence gathered from jeweler associations. So I don't have data to back it right now, but our imports of gold went down very sharply in February, and March also probably it came down. So as the biggest importer of gold, if Indian imports are down, that means household consumption might be coming down.
I hear your point. So if we strictly talk about the short term here, what would be the biggest triggers as per you for this surge in gold? Tariffs, Fed policy, something else, if you could enumerate?
Fed policy, if there are rate cuts, we are looking at 3 rate cuts this year, so gold should go up on that. Tariff uncertainty again. Now, with Trump threatening Iran, if any action happens on Iran, gold will shoot up because all the Middle East will try to keep their money in gold. And then the central bank buying of 1,000 tons is assured. It might go up further because people are afraid to leave their money in dollars and have it seized, as happened with Russia. So that de-dollarization trend is also helping gold.
Understood. And sir, at this point, should one buy gold, should one hold, or should one sell and take some profits? Your advice to investors?
See, long-term investors, we should buy. Indians are having 25,000 tons. That's the estimate. Nobody has counted. We don't have a household survey, but these are estimates. 25,000 tons is equal to $2.5 trillion. of gold Indian households are already holding. I would say 5 to 10% of one's portfolio in gold is more than enough. What gold moves is for 2 years it does very well, then for 3, 4, 5 years it might just stay very stagnant. So we have had very good move last year and beginning of this year. First quarter we are up 18%. Since November 2022 we are up 75% in gold. So we have had 2.5 very good years. Now my personal gut feel is that we are reaching the pause point, but geopolitical things could move it further.
No, I hear your point. Thank you, Mr. Bagga, for joining us. That was Ajay Bagga joining us from Mumbai, market expert. Always a pleasure speaking with you.